Is the market going to crash? And what should you be buying? Well, you're going to have a lot of different answers out there, but I want to walk you through a few issues that we have moving forward in the United States economy and in the global economy. Now, here in front of me, I have the S&P 500 index, the SPY. Now, you can see this is just a monstrous climb up. We're very, very high. You can see we had a sharp pullback recently. And this is the monthly candle here. It's not complete yet, but it's definitely looking at this point like it's going to be a red candle. Whether it remains that big or not, who knows? But it's looking a bit gloomy in terms of at least having a short-term pullback. Now, is the market going to crash? No one really knows that. But are stocks the best place to have your money right now with the current situation of the economy and the monetary and fiscal policy? So, let's look at a few things here. Number one, Ray Dalio. If you're not familiar with Ray Dalio, he is a famous investor. He has, I think, the biggest hedge fund in the world, and he's had excellent returns for many, many years. So a lot of people look up to him. Now, what Ray Dalio has recently done, which he had not before, is he bought a ton of precious metals, specifically gold. And you can see here, a large part of his portfolio, about 26%, is the S&P market. And now he recently bought a bunch, and over 15% of his portfolio is GLD. Not to include IAU, that's now 4.5%. So he has almost 20% of his portfolio now in gold. These are gold ETFs. Whether or not you should own gold or silver ETFs, that is a different video. I'll tell you what I personally do. I have some Roth IRAs, and I have purchased GLD and SLV in those. Now, let's talk more about Ray Dalio here. So here you can see Ray Dalio warns of a new paradigm that is coming. Buy gold, sell stocks. So he's talking about a paradigm shift where there will be a large transfer of wealth into some assets into another. It always happens. So here, number one, the central banks have been lowering interest rates and doing quantitative easing, which is basically printing money and buying financial assets. And printing money nowadays is really just done on a computer. But they buy assets, and that's called quantitative easing. Number two, there's been a wave of stock buybacks, mergers, acquisitions, and private equity and venture capital investing that has been funded by cheap money, right? Interest rates are low, and the credit and the enormous amount of cash that was pushed into the system. Okay, so they've made money cheap, and they made it easy for these companies to basically buy back their stocks. And there's some other details to doing that, but many people think it shouldn't even be allowed because it pumps the stock up even more. All right, number three, profit margins grew rapidly due to advances in automation and globalization. I can talk. And reduce the cost of labor. 4 corporate tax cuts made stocks worth more because they had more returns. So to sum it up here at the end, basically in different words, or actually these are his words, I think these are unlikely to be good, real returning investments. And he's talking about stock assets. And those that will likely do best will be those that do well when the value of money is being depreciated and domestic and international conflicts are significant, such as gold. So why is that? Gold is a currency. Gold does not give a dividend. Gold does an excellent job of keeping up with inflation and protecting you from rising inflation. And why could we possibly see rising inflation in the future? Well, one of the biggest reasons is that when the government creates money and puts it into the economy, they create it out of nowhere, the supply of that money has gotten bigger. So now you need more of that to buy the same thing. Now the Fed has typically tried to keep inflation up to 2%. They've changed it a little bit recently where the median is 2%, but that's their goal. They always need an increasing inflation, which is insane, right? They have a literal goal to constantly devalue the dollar. So the Fed has got themselves in a bit of a pickle here. They don't have many options left. Basically, since the financial crisis, they've dropped the interest rates to basically zero. And then after a little bit, they said, oh, we are going to increase them. But if you follow any of this at all, if you followed Peter Schiff at all, who I'm a big fan of, he called this the whole time that this just will not work. There's no way they can do that. It's impossible. So they slowly crept them up, and of course they had to push them back down to zero. So what a lot of people think is that interest rates are going to have to stay low for as long as we can see, until the Fed can't do anything and they're forced to come up. They're going to try and keep them low to infinity, okay? And that is not sustainable. Also, the money printing will just go on and on and on. And either slowly there will be inflation that will just gradually grow, or we could have, if there's a crisis, if something happens, there could be something called hyperinflation, which is basically just inflation that happens very fast. You can look at Venezuela, which is actually a great example. Venezuela. This is a country that had the fastest growing stock market up until they had a huge crisis. Well, who else has that? The U.S. Continually, year after year, fastest growing stock market, the biggest gains, and it's not impossible to happen here. I don't want to be a doomsday guy here, but we have some big problems. Now, let's look at another big problem the government has. The U.S. debt. We all know the U.S. has a lot of debt. It's been talked about on and off for a while, but really look at the numbers sometimes. This is a great site. It's usdebtclock.org. You can just see how quickly this increases. It's insane to just look at it for, half a minute. It's just insane, right? We're almost sitting here. We're going to be up 500,000. It's just nuts. And if you look here, debt per taxpayer. So lucky you, if you're a taxpayer, your debt is about $215,000 that you owe because of the government. And if you look at U.S. federal tax revenue, oh, look at that. It's about $3 trillion versus $26 trillion, which we still owe. So anyhow, we have a lot of problems coming with the debt. This is completely unsustainable, and there's going to be an issue at some point. This can't go on forever. At some point, I really do believe that inflation is going to become worse and worse, and ultimately what will happen is the dollar will become devalued. So lastly, let's look at another person you may have heard of, Warren Buffett. Okay, if you haven't heard of Warren Buffett, he's probably the most famous investor of all time. He's had excellent returns over many years, and he has been a continuous proponent of basically stocks and assets and companies, but not gold. He's always shunned gold because it doesn't produce a dividend. It doesn't give you a something that's an annual return, right? And over time, that's understandable. But even Buffett, here it says from gold hater to gold bug, he's recently purchased 21 million shares of Barrick Gold, which is a gold mining company. So this is big. Warren Buffett finally dived into the gold world and went in pretty hard. So if he's doing that, what's coming? We're just going to have to see. I can tell you what. I'm not messing around, and I have purchased GLD, some SLV, so I'm definitely putting some of my assets into gold, and I'm taking this seriously. Now, whether the stock market, back to that, if there's a crash, there's not, I'm still going to be buying. This is going to be a long-term thing for me, and a lot of big minds are all on the same page, and I think as many people as I can get word out to, I really think they should have at least some of their assets in the gold currency. Now, the thing is with the stock market, will it really crash? Will there be a big crash? That could not necessarily happen, and especially it could not happen for a long time, because the Federal Reserve is really pumping money into this economy and propping this market up. So it's going to continue to do this until it can't anymore, because it doesn't want the party to stop. So this stock market could continue to ultimately grind up for much longer, but that doesn't mean your money won't be devalued. That's guaranteed at least 2% pretty much, and could be much more sooner than we would like to believe, or it could come slowly, it could come later. My whole point is, I think it is wise to protect yourself. If you have some spare money that you're willing to save or invest, I'd recommend looking into a little bit of gold. And as I mentioned before, if you have Roth IRAs, you can purchase GLD, SLV, and there are a couple others like I showed you before. So I hope that was helpful. It may have been confusing, but we're in crazy times, and the simple fact is, you might want to buy something.